Get in our first guest on the show. Sari retailer Silks has had a decent debut on the exchanges with a gain of almost 10% from its issue price. It listed with a 4% premium as well. We have Bharadwaj Rachamadugu, who is the senior vice president at Silks, joining in to discuss their listing and the outlook for the business going ahead. Thanks a lot, Bharadwaj, for joining in. Pre-COVID, you were growing at around 10 to 15% in terms of revenues. Do you think this will now sustain going forward? Can you grow at a faster clip? What have you done in the first half of this year? And what's your outlook for the next couple of years?
So if you look at our growth, I think definitely yes. We are now that, there's a visibility now in the front. I think we are ramping up with like 2 stores coming in the near future. We are coming up with 2 stores in Chennai and 1 more store in the pipeline. So we expect to open about 10 stores by the end of Q4. And we believe that growth trajectory of how it has historically been, I think it's going to be a little bit more aggressive because of our strategy with respect to opening more and more stores in the Tamil Nadu belt. We've already identified places, we've understood potential markets, and we will be now ramping up faster to ensure that our growth is much more fueled by aggressive growth expansion mode that we get into. Yeah.
Hi Bharadwaj, Nigel on this side. After the last time we chatted, I was getting a lot of queries with regard to the type of saris, the names over there, and pre-listing. That's good to talk about. But now we need to get to some numbers because you have listed. And the stock price as well is reacting quite favorably. So let's get a couple of numbers. Going by the numbers that you're telling us that you're expecting to grow at a similar clip. So this year you'll definitely do what? In the vicinity of around 1,550 crores, point number 1. And also there's been gradual margin improvement. Your gross margins are closer to around 40%. EBITDA margins are in the mid-teens. Can you sustain these levels? Give us a guidance on both those two.
Sir, 2 things. Yes, definitely yes. The whatever numbers that you're speaking about is that's the target that we wanted to achieve by the end of this year. However, with respect to margins, we do not see any slowage or any lows in terms of the margins. We continue to maintain the same margin profile. If not, we always strive to do better because from the proceeds as well, we are earmarking about 120 crores, which were supposed to be for GCP. Now we are trying to do that to improvise our margins because we believe the vendors and weavers who are strategically sitting in different parts of the country, if you're able to improvise their payable days, that will enable us to increase the margins a little bit more. So that strategy is still there. You will definitely be able to see the improvement in the coming quarters. It will take about a quarter or 2 for us to start putting these funds completely into use to improve that. But we do not see any slowage or any gross margin decline that we see in the near future.
So give us the number, right?
So I think a number will be a little difficult because it's for us. We believe that this by deploying the funds will take a while for us to deploy the funds completely and get advantage.
Let me give you a number.
We need to complete a few cycles.
Yeah, Bharadwaj, let me give you a number. Last year you have done EBITDA margins of around 15.5%, and you're saying that there is no downside risk. So margins will improve from this EBITDA margins of 15.5%, and gross margins as well. They were at around 39%. So at least you will do what you did last year or better than that?
Correct, sir. I think we should be able to do marginally better than where we stood last year. Because now already Q2 is passed. I think Q3 and Q4 definitely is going to be a bigger season because of festivities, occasions, weddings, everything put together. So we should be able to do better than what we did last year.
All right. So numbers aside, Bharadwaj, I just wanted to understand your business goals going forward, because I just look at your numbers, most of them come in from South India. That's a competitive market. There are a bunch of brands out there, a lot of national players looking at this space as well. And secondly, nearly 2/3 of your revenue come in from saris. So from both Nigel and me, our question is, 1, are you looking to move out of South India, expand beyond that? And secondly, are you also looking to move out of saris, go into, other materials or other attire for women, and more importantly, men as well? Are those areas that you're eyeing? Do you have goals for this?
So if you look at our current product mix, it's saris is dominating, but our strategy moving forward will be definitely to penetrate into the Tamil Nadu market. And Tamil Nadu market, saris is the most dominating piece of apparel when it comes down to women's ethnic wear. So in terms of the product mix, I do not see any weakening in terms of the sari and the non-sari component in terms of product mix. It will only increase because Tamil Nadu as a segment, we are doing phenomenal with respect to our old 4 stores doing wonderful numbers. And with the upcoming stores also, because it's coming all in Tamil Nadu, the sari composition is going to be much more denser. Now, talking about our future, I think what we've done is with the IPO is like we've given about 30 store projection that we will be completing in the next 2 fiscal years. That remains intact. And we will, because it's all coming with a Varamahalakshmi store format, which happens to be majorly with respect to saris. I do not see any signs of trying to change the product mix at this point of time. Sari will still be our preferred area of operation for us.
All right, and final question then, what do you...
And talking about our growth beyond this thing, definitely yes, I think we will be expanding soon into the other geographies as well. But in the near future, in terms of the visibility, we are focused on these 3 years, trying to open about 30 stores of Varamahalakshmi and Kalamandir, all coming in a cluster format in and around Tamil Nadu and Chennai.
All right, so Varamahalakshmi and Kalamandir would do about 30 crores of revenue per store, right?
See, average for Varamahalakshmi is about around 48,000 rupees per square feet is what the general averages are that we have been getting from the companies in the past. We expect it to be on the same levels or even better because Tamil Nadu market has a better market and those old stores are doing better than the company's averages. We believe is going to follow the same trajectory moving forward as well.
All right, Bharadwaj, thank you for joining in. The analysts will plug in those numbers basis the guidance that you've just given in terms of store openings, etc. But for the near future, 1,500 plus crores in terms of revenue with margins at least better than last year is something that the street is eyeing. Wish you good luck. This is your debut on D Street. Let's see whether this outperformance sustains going forward or not. Take a short break.